Hey everyone, thank you for tuning in. Today's video features a 1 DTE strangle in the emini options, and it's a fun one, so let's get right into it. All right, so I'm going to take a quick look, see what's going on in the markets. It's almost a quarter of 6 a.m. Pacific time, and looks like the E-minis are up a touch, 17 handles. Let's take a quick peek at most active for now. Beyond Meat. I forgot all about those guys. Trading about 44, 24-ish% higher, and let me do a quick scroll to see HIMS 31.35. Okay, and Tesla. All right, so that's a quick look there, and I also want to see what's happening with oil. Oil's up. The June contract a bit over, just a touch over unchanged, up 12 cents, trading at 87.54. Okay, so what I wanted to bring up, as I mentioned earlier, is options in ES Mini, and I currently have on the strangle. Prices, looks like I'm about 100 wide, 90 wide, long 71.90, and call, and long 7100 put. Now, what's nice about options in e-minis is a couple things right off the bat. The market trades basically 24/6, so not quite 24 hours a day. There's an hour that during the week, Monday through Friday, when they shut down, 2 p.m. Pacific time, they shut down for an hour, and then they reopen at 3, adjusted for your time zone. And then the rest of the day, the rest of the night, the market is open and you can trade. So if you have an adjustment or you want to close a position late in the afternoon, early in the evening, in the middle of the night because you like trading at 2 a.m., this is where you go for it, as opposed to the SPX, which I also do quite a bit of. The SPX is open during regular cash hours, so from 6:30 a.m. Pacific time to 1 p.m. Pacific time. It trades concurrently with the E-minis, of course, but here we have the flexibility of greater hours available to trade throughout the day. And the margining is different rather than something, let's say stock options, where you're going to have the portfolio margin, or if you have a smaller account, Reg T. Here, it's different. You get more leverage. So that's also possibly, if you know how to take advantage of that and use it correctly, it's advantageous. All right. So when I set these up, I do need a bare minimum of a few specific conditions. I'm basically expecting realized vol to exceed implied vol, because I'm going to go out for this particular structure. For each side, for each wing, I'm going to go somewhere between 20 and 25 delta. That's a general guideline, not a hard, fast rule. Between 20 and 25 delta, and lately I've been able to do these somewhere between $12 and $16 total. Okay, so you go out to the 20-25 delta for the out of the money put, you go out to the 20-25 delta for the out of the money call, and then you're looking for a move in either direction, mind you, that is wide enough, big enough to be able to sell either or both of the wings for profit. So in this case, let's see, the price of the contract, and the one I did the other day that I'm talking about, was on the 16th. On the 16th at 12:19 p.m., I went to 1 DTE. So these contracts expired a day later. I bought the 7,020 put. I bought the 7110 call, and the price, the debit I paid for that is 1280. Now 1280 represents the multiplicand, and in the ES the multiplier is 50. Remember, in SPX the multiplier is 100, but in ES the multiplier is 50. So 1280, let's just round it to 13, round it up to 13 as the cost for putting on this particular structure. And again, 13 is the multiplicand, 50 is the multiplier. So this trade setup costs $650, and that's the max risk you have on the trade if you get into it. And in addition to the cost to max risk, there is a settlement procedure here that is different than the SPOOs. So what you have to understand is that if you have one of the contracts expire in the money, it settles to futures. So you can end up with a futures position, and the margin on these is probably somewhere now around 22, 23 grand. So if you don't want to concern yourself with having a position that's going to require that kind of margin, make sure you exit out of these, whatever you have, before the close, maybe well before the close, if you're concerned about pin risk or assignment and you don't want it to settle to the underlier, which is the futures. SPOOs, what's great about that contract is that it's cash settled, so you don't have to worry about assignment. Everything just settles to cash, which is quite convenient. But here it is different. So think of it as having two risks. You have the cost that you pay as risk number one, and then the other one, which can be much greater and of more concern, is the settlement procedure. So keep that in mind. All right. Anyway, let's get back to the specifics here. On Thursday the 16th, roughly 40 minutes before the close, I paid 13 for the strangle, looking for a move. I actually set it in order overnight because I do remember that day I was underslept from the day before. So I put it in order to close the trade as a package, not any particular or both wings as separate orders. I put it in as a package. Sell it out at 40 was where I entered it, and I actually got filled the next morning about 20 minutes before the cash opened. So I had the position overnight for basically a day and a half, if you want to, or not even a day, just half a day, 3/4 of a day, basically. 12, 18 hours, so roughly 3/4 of a day. And I was able to get out at 40. And again, the multiplicand here is 40. The multiplier is 50. So 40 times 50 is 2,000. And the cost of this trade was 650. Nice little profit for a trade that I basically held overnight. Doing the same thing today. I currently have on this 7190, 71 even strangle, and I need a move. At this point, what did I pay for this? Around 12 for the package, and it's currently trading for 8.5-ish. So I'm sitting on a loss right now. We have about 36, 37 minutes for cash to open. So I have the rest of the day to get out of this, and I'm currently working orders to sell these somewhere around between 25 and 40. Since the market's going to open soon and I'm wide awake, if I'm fortunate enough to suddenly have a spike in vol, I know that Warsh is speaking today, and what he says or what he's going to say has the potential to serve as a catalyst for a big move. I'm not predicting that there's going to be a big move either way or any way. I don't know, but it is possible. And that being said, I do expect things to remain quiet and peaceful until he speaks, and that's going to be in a couple hours. But in the meantime, where I'm going with this is that I have time to monitor the position more closely as opposed to when I'm asleep. So if the market suddenly becomes quite volatile, imagine being able to sell out each wing separately. Let's say I sell this one for 30, the call, and I sell the puts for at least 30, 40, 50, who knows. It's possible, and I'm not saying that's going to happen, but it would be nice to pick up 50 plus on these. And remember, the multiplier is 50, so that'd be pretty good for a trade that costs roughly $600 to get into. All right, that's it for this one. Remember the convenience time-wise trading these. That's fantastic. And also make sure that you understand how settlement works. It does settle to futures. So unless you want to take a futures position on, get out of the trade or roll it before expiration, so you don't have to worry about getting assigned at settlement. Okay, that's it for this one. Have a good trading day. Thank you for watching, and I'll catch you guys later.